If you are working in any accounting department of any company, then I can tell you that one of your critical KPI is to handle audits. And not only handle audits, to ensure that the audit is completed on time before the deadline and ensuring that you get a clean report from the auditors. It's quite challenging because you as an individual or as a department head, you are handling the audits, but you are taking the complete responsibility of the company and ensuring that you get a clean report. So today in this video, what I am going to talk about is how to prepare for the statutory audit. I am not going to cover internal audit or any concurrent audit. I'll be talking more about how to handle the statutory audit. So in my career, as of now, I have handled more than 40 to 50 audits, and I'm going to share my experience and hope it is helpful for you when you manage your audits. So I'll be talking two parts. One is pre-audit, that means before the auditors start the audit, what should be your preparation? And the second is once the auditor come to your office or start the audit, what should be your action plan? How efficiently you can drive the audit. Okay. So when it comes to pre-audit, the first thing what I specifically prefer is that you should have proper balance sheet reconciliation. And I know nowadays many MNCs, many Indian companies are working towards that. Okay. It's not that balance sheet reconciliation was not there before, but the way automation is happening, the way many tools are available in the market, this reconciliation is not so time consuming, right? Because readily available tools are there who can give you ready-made reports and you need to only take action on that. Okay. Now, what is the meaning of balance sheet reconciliation? It is very simple. You have to check the ledgers and see that the books are clean. Okay. Now, I can give an example. For example, the company is having GRR account. What is GRR account? When you are getting material, the inventory is debited, GRR is credited, and when the invoice is processed, right, the GRR is debited and the vendor is credited, right? Now, what is the meaning of GRR? That means the goods are received in the factory or in the warehouse, but the invoice is not processed if the GRR is outstanding, right, in the ledger. Now, you as a finance guy, if you see that there is an amount sitting from more than 2-3 months, what is the meaning of that? That means inventory received by the factory, but the invoice is not submitted to the finance team, right? So when you do this reconciliation, the immediate action what you need to take is go to the factory or talk to the respective person and ensure that the invoice is collected and your accounts payable team process those invoices on time, right? So this is one of the actions. Similarly, it could be your CWIP, capital work in progress, right? So you are spending money on fixed assets, you are putting the amount in CWIP. There could be chances that the installation is completed and the machine is put to use, but you are not aware of it. And the aging of CWIP shows more than 3 months, 4 months without any specific reason. In that case, you have to look into it and see that how do you talk to the respective person, get the installation certificate or capitalization certificate and capitalize the assets. So during balance sheet reconciliation, you are ensuring that the trial balance is clear, clean, and there is no issues or there is no concerns in any specific ledgers, right? So if you have concern, then obviously your auditor is going to question that. The auditor will not agree that if there is an amount sitting in the GRR account for more than 4 months, or if it is goods in transit, right, and the material is coming from any other country, there is a lead time, right? If the material is coming from Europe, the lead time to India is 60 days. Now, if you have a goods in transit for more than 120 days, the auditor is not going to leave that, right? They will question that whether it is genuinely a GIT or it is something a wrong entry or dummy entry, right? So always ensure that you check the GLs properly and you clean up the books, right? Your auditor should not come and tell you that what issues you have. You should identify the issues much in advance and start cleaning. Because more your books are cleaner, more you will be confident to talk to the auditors. Otherwise, always you will try to hide things because you know that there are some concerns in the ledger and the auditor may identify that. So this is one of the area where as a finance manager or as part of the GL team, you should ensure that the books are very clean, right? There may be challenges where you are interdependent or you are dependent on certain people. Then you have to ensure that how you build relationship with those people and ensure that the things are happening on time. So this is one of the preparations before the audit starts. Second is IFC control. What is IFC? It is mostly your financial controls. And today in India, it is mandated that the auditor has to issue a report on IFC controls. If the IFC control fails, then it is not right for the company, right? Because control is very, very important. And if the shareholders come to know that your controls are not working, it gives a very bad impression in the market. So when it comes to IFC, you should ensure that your internal auditor covers this scope of IFC. There are companies where they give complete scope to the internal auditor to perform the IFC. There are companies where few key activities is given to the internal auditor to perform and the remaining is done by the finance team itself. So in this process, if any specific concerns is raised by the internal auditor, my suggestion that please start working on that immediately before your statutory auditor identifies. Because if they identify, then you don't have time to make a remedy plan, right? And generally the audit starts after March, right? And IFC control should be within your financial period. It can't come after the financial period, right? So within your financial period, the control should be there. So if your internal auditor identifies and give you the report saying that these are the areas for improvement, then my suggestion that start immediately on that. As quick as possible, take action on those line items. This IFC may be relating to finance department or could be related to other department as well. For example, a PO process, which is under the purchasing team, right? So if there is a process which is not working well, for example, a SOD in PO, in that case, as finance person, you can go to the procurement team and say that, look guys, there is a issue raised by the IFC team, or you can say internal audit team on IFC topics. So these are the remedy plan which need to be taken immediately. So you have to, cross-functionally talk to many departments to ensure that the quality of the books and the controls are well placed. Third is audit trail, right? Or you can say that ITC audits. So ITC audit and audit trail is one of the areas which the auditors always comment saying that things are not in the right way. So you should understand that as per the company's law, audit trail has to be performed by the company. Okay, you should do a audit of the audit trail and document and state that if something is wrong, then how you have taken the action on that. So please ensure that all these activities are taken care before 31st of March, and you have a clean report as a management. If management believes that there is no clean report, then it's a very high concern, because auditor will comment saying that the management has failed to perform or management has identified some concerns. Hence, auditor can't give a clean report. So these are 2 to 3 areas: balance sheet reconciliation, IFC audit, and the audit trail audit. So please do it before you start the audit. Now, when you start talking with the auditor, the first point is discussion about the audit plan. Okay, I would suggest that this audit plan should be a deep dive review along with auditors. And I've seen in many companies they don't do audit plan. They just call the auditor and say that, okay, let's start the audit from 1st of May, right? Starting and ending can be discussed, but the most important part is the audit plan. So what actually you should cover in the audit plan? So you have a direct face-to-face meeting, I would recommend, because it is more interactive. And during this audit plan meeting, I would say that bring your key stakeholders to the meeting. Not that only the finance team should be part of the audit plan. You call your HR person who is giving the payroll data. You can call your factory person who will be taking care of inventory count, inventory valuations, right? You can involve your business controllers who are generating more profit from the service side. So your people who are more going to interact with the auditors. So bring those people into the audit plan so that they also understand that what the auditor is trying to speak or demand on the audit side. Now, in audit plan, it's not that you sit and start talking about that how should be the planning. My suggestion that as the auditor is coming once in a year, in certain companies they do quarterly audit, but if it is not listed company, then they will be coming once in a year. Spend good amount of time in briefing them the development what you had in last 1 year. As a business, what are the areas you have developed? There can be new area of revenue, new inventory, new business model. There is a plan of merger, demerger, whatever you have, okay, or buying of any huge assets for future expansion, whatever may be. Discuss with the auditor so that auditor visualize that what are the things there in this audit and what are the areas they should cover more in depth, right? And in the audit plan, you should list down the complete list of activities what the auditor is going to do, along with the timelines. I know timeline may be challenging on the day first, but yes, after the audit plan, you can share with the auditor saying that, okay, this is the timeline I am planning to share the details. And you also ensure that the audit is completed on time, right? So once audit plan is done, the mutual understanding between the auditor and the team should be very clear. Even your team members should know that, okay, if I have to give fixed asset schedule, by when I should give to the auditors. All the timelines should be very, very clearly mentioned in the audit plan. The next point is that I would suggest that take your auditors and have a meeting with your legal head and tax head. Very important, because I have seen that the auditors, they meet the legal head and tax head towards the end of the audit. They find something surprising. Again, they need to go to their tax team and evaluate whether there is a concern of contingent liability provisions or there could be impact on deferred tax. And last moment, everything will be at height, right? So, and it will be creating tension for everyone. So, my suggestion that once the audit plan is done, the next event should be discussing issues like litigations, or if there is any case with any particular court or maybe tax appeals. Please discuss transparently with the auditor so that auditor understands what is the status of each and every case. And if the auditor want to take an opinion, then definitely the auditor will take an opinion internally, or may ask the management to take an opinion if there is no clarity. Third, plan your counts very clearly. What is counts here? Inventory count or asset count. So if the auditor want to be part of this count, then it should be very well planned, right? It should not happen that, okay, tomorrow you call the plan and saying, and say that the auditors are coming tomorrow, let's have a inventory count. And it will be surprise for the inventory team as well, and they may not agree for that. Okay. So always plan very well, have the dates, inform the factory people, inform the auditors, coordinate with them and ensure that there is a smooth count. And if there is any discrepancies identified, then see that how best we can adjust the book or see that what is the reason for these discrepancies, right? So this is all about planning. Now, when the audit start, the first thing what as a team we have to prepare is preparation of financial statement. So I would suggest that the person who is preparing the financial statement should have good knowledge about accounting standard, should have good knowledge about accounting, so that the mapping what he prepares is accurate. Okay, I know it is not possible to do 100% correctly, but at least 95% is. It can't be possible that you put some expenses instead of salary, you are mapping it to some other category. So that is very important, because when the auditor receives the financial statement, they start doing audit based on the line items you have mentioned, right? If you have boring, then they start with boring. But if you are not showing boring and you have shown something else, right, they will skip that and they will start doing audit of something else. So classification of your items in the financial statement should be as per the company's law requirement, as per the format issued by the under Ind AS, or maybe any specific requirement of company law. So prepare in that way and share with the auditors, so the auditors knows that which are the areas to cover at the initial stage and which are the areas they can cover later, right? Now, more important is the notes to accounts. I know sometimes it happened that we prepare the financial statement and give to auditors and say that, okay, notes to accounts we'll do later. But I'll tell you, when you prepare the financial statement, it is always good that you prepare along with the notes to accounts. Because sometimes I have seen that when you prepare notes to accounts, you identify certain errors, right? For example, lease accounting. When you prepare opening, addition, and depreciation, closing, sometimes it may not match because there could be an error in your ledger itself. So prepare all these notes accounts so that if anything to be modified in the financial statement, you can go and modify that. And it gives a confidence for you also, right? You have prepared the complete financial statement and you have handed over to the auditors. After preparing the financial statement, the most important part is sharing the schedules. So what is schedules? Generally the backup or the details of the data what the auditor is expecting to validate the numbers in the financial statement. Here is the tricky area, and I'll tell you, most of the auditors are not happy with the client because the quality of schedules are not good. Okay, so what I used to do, I used to verify the major schedules, because as individual I can't go through all the schedules prepared by the team. So any critical schedules like revenue, fixed assets, or inventory, cost reconciliation. So as a senior guy, I always sit with the team and see that the quality is good. We have proper reconciliation, so the auditor understand that what you are giving is correct. Okay, so when you're doing a reconciliation, please ensure that the opening balance what you give is as per the signed balance sheet. Sometimes I've seen that we do a lot of OB entry adjustments, right? Outside book adjustments in financial statement. But when you're preparing the reconciliation, you are doing from the ledger and you're giving it. Then the auditor will be confused. That opening you are showing, for example, 50 lakhs, but the signed balance sheet says 75 lakhs. So how that is possible? They will again return back the schedules. So whenever you're preparing any schedule, please ensure that the reconciliation should match to the signed balance sheet, right? Especially the opening balance. And when you're determining the closing balance, and if you have some adjustment entry, you also show the same thing, right? So it's not that you have to match with the trial balance. So your request should show that what is as per trial balance movement and what is as per the OB entries movement, outside book entries. And the closing balance should always match with the financial statement. Sometimes I have seen that what happens for a particular ledger in your team, there may be two person who is responsible for that. For example, somebody may be responsible for one segment, business segment, another person may be responsible for another big business segment. In that case, please ensure that when you are sharing the schedules, both team member they integrate the report and give it to the auditors, because auditors sometimes they may face challenge that matching the numbers, right? You will be giving one number, other person will be another giving another number. Matching is quite difficult. If it matches is good, if it doesn't match, again he'll be again chasing you to see that how better we can do. Once the schedule is given, I would suggest that three important trackers to be created. One tracker is the schedules what you have agreed to share with auditors along with the timeline, so that you can tick every day to see that whether the team has submitted on time or not. Second important is a tracker to see that what you have aligned with the auditor, whether the auditor is completing the areas on time or not. This is the trick which I used to use during my audits. I always chase the auditor saying that, okay, you agreed that by the end of this week you will complete AR or inventory. Why it is not happening? What are the challenges you have? Whether the team has given the data or you have some dependency internally within your team. Because unless you challenge them, they will not work at the efficiency what you expect, right? So always it is good that you also keep a track on their performance, their way of working, or it could be chances that they're prioritizing some other areas and not prioritizing the small areas, right? But yes, it could be a mutual understanding, and you also can prioritize based on what they prioritize. Third tracker is all the confirmations. I have seen most of the auditors, they don't give importance on the confirmations. They issue the confirmation, but they don't track it that whether they've received or not received. But later point of time, I've seen that they chase and demand the client saying that unless I get all the confirmation, I'm not going to sign the balance sheet. So it should not be a showstopper at the end. You completed everything, but because of confirmation, the audit is not getting closed. So keep a tracker and see that the confirmation is coming on time. So you should plan very well. All these three trackers should not be maintained by one person. So within the team, you distribute, because it will be a very strong, uh, review is required on this. One person can't take all the three trackers, and if he starts maintaining, then he will not get time to spend time with the auditors. So ensure that each different individual is having this tracker and they are maintaining this tracker very well. Now, I would suggest that quality of schedule is given. Ask the auditors to give the samples on time. Okay, because I have seen sometimes that they start with some areas, they give some samples, and then after 1-2 weeks they give few more samples. So my suggestion that talk to the auditors and ask them to roll out all the samples. It could be revenue, it could be expenses, it could be your deposits, advances received from customer, any area. Whatever sampling they want to do, let they give it at the initial stage, so that you also can take 1 to 2 weeks time to pull out all and give it to them, so that at one shot you can hand over all the samples and there will be no more disturbance on the sample side. The challenge what you may get during sample is that coordinating with different departments. Sometimes it may happen that for revenue they may require a lot of documents, right? For IFRS 15 cutoff, for example, POD or insurance copies. So in that case, you are dependent on a person who will be in the factory, right? So if the samples are given by the auditors on time at the initial stage of the audit, then you also can coordinate and give sufficient time to the person who is in factory to pull out the data, because the sample is for the full year, it's not for a particular month. So it may take time for the person to pull out those documents, right? Now, when the audit is, you can say that towards the end, you always talk to the auditor saying that have you got clearance on the litigation part, have you got the clearance on the tax part, because that is very very important. Have you got clearance on any specific accounting treatment? Sometimes it may happen that there is a unusual business transaction during the year, and the company has taken a specific call on accounting treatment, but the auditor is not agreeing to it. In that case, the auditor may go back to their internal team and check that whether that treatment is acceptable or not. So those cases, don't keep it till the end. Ensure that those are completed on time. Okay. Next important point is the IT audit by the auditors. This is something which I feel very challenging when I was handling the statutory audit. The challenge part is that as we are mostly working on the financial statement, the auditors will focus on statutory part, financial statement part, and we as a client also will focus on that. And at the end, they'll focus on IT audit, which is too late, right? You have 5 days, 6 days for the board meeting, and they bring the IT team. At the time, getting coordinated with all the IT team members is quite challenging, because you will be with full tense completing the financial statement, handling notes to accounts queries, a lot of things will be there. So my suggestion that when you're doing your audit plan, bring this IT testing in the audit plan and make it very clear that what specific dates you're going to do this or IT testing, so that your IT team is aware of it. They also plan it along with the auditors and they can properly do it. Now, when it comes to Caro reporting, okay, there are certain areas. I'm not going to read out the Caro reporting. My suggestion that go through the Caro reporting and see that is there any area of risk which you feel that should be discussed with the auditors. That also you do it immediately after the audit plan. Okay, don't keep it at the end. It's not be that okay, the auditor should come and tell you that what is the risk. If you have already identified any issue which you feel that could be reported in Caro, please talk to the auditors and ensure that it is properly managed. One more important thing I would like to say that if any concern is raised by the auditor, okay, in any on any topic, don't keep it with you. Go and talk to the CFO, talk to the top management, and see that what best answer can be given to the auditors. Okay. Sometimes it happened that okay, the question is placed to me, and I am trying how best I can answer and convince the auditors. But if you know very well that you can't convince, this is something very strategic question, or this is something which is very very important that the management should be involved. In that case, don't keep that question with you. Go to the top management and talk about the issues or challenges what the auditor is challenging you. Okay. For example, if the auditor has identified a fraud, don't try to fight and explain that there is no audit. If there is some proof they have identified, take the auditors to the top management, have a joint discussion and see that is there any risk which the company should evaluate. Okay. So these are few tips which I feel that if you start using in your audit plan or developing the quality of your books, I would suggest that if not at full scale, but at least slowly, if you can implement whatever I talked about, it will help you to ensure that audit is completed on time. So that's it from my side. Hope I have tried my best to explain what I have experienced during the audit time. So if you have any specific query, please give in the comment box. I'll be happy to reply on that. And if you have not subscribed to the channel, request you to subscribe to the channel. Thank you. See you in the next video.